everybody. It's Jeff over at Metastock. Henry, good to see you here. I hope you guys are doing well. Henry said hello. Nice to see you. Hope you guys are doing well. It's getting to be summer, one of my favorite times of the year. It's very hot here in Utah. And in any case, I hope you're enjoying the summer. I want to thank you for coming today. It's good to have you. We have a very good guest on, and we're going to bring him right after this legal disclaimer. So let's get to it. Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Xavier, thanks for saying hi. I hope you're well. Welcome. So with that being said, I've only said that a few hundred times. Ryan has been a guest in our webinar room quite a few times. He's got some very, the thing I like about Ryan is he has a way of, Thomas, hello. It's a way of simplifying things and kind of making them very, very approachable to the market. And generally, just to kind of give you a little bit of background in terms of where he came from, he reached out to us maybe like a year or two ago. He wanted to show us kind of the simplicity systems that he was designing for Metastock, and I really liked him, so we added them to the product catalog. So he's going to talk a little bit about kind of them today and how they work, and kind of give you a good idea of how to find good trades in the market. So let's go ahead and bring him on here. And Ryan, you should be unmuted. How are you doing today?
Very good. Glad to be here.
So I usually try and put presenters a little bit on the spot as soon as they get started, but is there anything you'd like to tell us about yourself?
Yeah, well, so like you said, when we approached you guys, maybe I think it was around 2 years ago, we had been doing primarily consulting with high net worth individuals on having them trade their own account. And what made all the difference was as soon as we connected with you guys, it's the way Metastock shows that visual representation of data to actually see how a stock is going to move makes all the difference. And we'll talk about that a little bit today too.
Yeah. I'm going to let you go. Take it from here.
Okay, good. Having said that, I'll jump right in then. For those of you that don't know me, I'm Ryan Capaccio. Like Jeff said, I'm co-founder of Simplicity Trading Systems. And I'm also managing partner of the Capaccio Trading Company. Now, these are two companies that have semi-long names, and they sound very similar. Capaccio Trading is an equity trading firm where we put up our own money to trade large, mid, and small cap stocks. That's primarily what we focus on. So Capaccio Trading is only a trading company. But as every trader knows, you need a really good, solid system to stay profitable. So where does ours come from? That's why we started Simplicity. At Simplicity, we create trading strategies that are designed to shorten analysis time and help you predict future movements. Because we know that technical analysis can take up a large portion of your time. And it can sometimes be very, very subjective, leaving a lot of people feeling confused with nowhere to turn. So all of us at Simplicity set out to change that. And with the charting power of Metastock, we came up with the Endeavor add-on. With Endeavor, you're going to be able to stop reacting to stock movements and start preparing for them. So how do we do this? Well, as some of you may already know, we take a slightly different approach to trading than most. You see, we don't believe in telling you how to trade. Instead, we want to tell you how price is going to trade. That way, we're empowering traders to make their own decisions. So you don't have to feel enslaved to TV programs or chat rooms for people's opinions that are going to be passed along as facts. If you know how price is going to trade, then you get to decide for yourself if the movement that's about to happen fits your unique trading style or your overall investment profile. Now, having said that, today we're going to talk about three important topics. Number one, how to tell the difference between a long-term and a short-term trade. Number 2, how to stay flexible when trading and adapt to the changes in the market. Number 3, what it means to be a well-rounded trader. Now, you'll quickly notice that all 3 of these topics blend together. And what I mean by this is, to be a well-rounded trader, you have to be flexible and learn to adapt your strategy to how the markets are trading. Now that means taking both long-term and short-term trades. A trap that I see a lot of traders get stuck in is they place a trade for the long term, but then halfway through that trade, they need cash for whatever reason. So they sell out of their long-term position too quickly, giving up a lot of the profit. When what they should have been doing is placing short-term trades on quality stocks in the background while their long-term trades are running. This way you have cash flow and you don't need to make a ridiculous amount of profit on your short-term trades because that's what the long-term trades are for. By placing these trades at the same time, it takes a lot of the pressure off both your long-term and your short-term trades or positions. So the key to this idea is being able to identify when you should be taking long-term trades versus short-term trades. And that's where the Endeavor add-on comes in. Our signals will show you when price has the opportunity for a long-term trend or a short-term trend. So you don't have to make that distinction yourself. We're going to do that for you. Then all you have to do is decide if that's the type of trade you want to take. So right about now, people are usually thinking, okay, but that sounds really complicated, so where do I start? With our simple 3-step system. Categories, step 1. First, we identify the big picture movement. Is price likely to trend up or down over the long haul? If price is likely to trend up, then we move on to color codes, step 2. We identify the correct upward movement. Is price going to move up for the long term, the short term, or is it going to be a rebound movement, also known as a swing trade? Once we've identified which upward movement price is going to make, then we move on to smart get outs, step 3. We're going to identify the right time to exit. Knowing when to enter a trade is important, but remember, getting out at the right time is what actually makes you the money. So before we go in, we identify our exit strategy. When you put all 3 of these steps together, you're going to start to see a system that's designed to put probability in your favor while keeping you focused and unemotional, because there's no guessing involved with this system. So let's break down these steps and go through them one at a time. Starting with categories, step 1. Identifying the big picture movement. And this is how it works. After you've selected your security, we categorize price as either Endeavor or Discovery. The Endeavor category represents potential upward trends that could reach their all-time highs. However, the Discovery category represents potential downward trends that are extremely likely to either consolidate or continue moving down to their lows. With these classifications, though, you'll be able to tell at a simple glance if price is more likely to have upward or downward trends. Now, let's jump into Metastock and we're going to look at some live examples. I already have these set up here. Okay. So you'll notice that on the bottom of these charts, they all say either Endeavor or Discovery. This is what Metastock calls a ribbon, and it's going to be automatically applied to every chart that you bring up as soon as you apply the Endeavor and Discovery template, which I've already done. You know that because you can see the bottom of every chart says either Endeavor or Discovery. Now we're going to go over this process, but you'll quickly find out that most stocks, since, well, all stocks are cyclical, most stocks spend time in both Endeavor or Discovery, giving us the visual of them trending up and trending down. Okay, so step 1 is all about identifying if price is more likely to trend up or down. Now, right off the bat, you can plainly see that the 2 stocks on the top are in Endeavor, and we can see these uptrends, and the 2 stocks on the bottom are in Discovery, and we can see the downtrends. Let's get more specific though. First, we should probably introduce our stocks. First, we have Aspen Technology, AZPN, Fossil, FOSL, Bed Bath & Beyond, BBBY, and General Electric, GE. Let's start with Bed Bath & Beyond. This is one of my favorite examples because this is one, let's back out here. Now we get the full picture. This is one of those stocks that everyone has heard of. Most people interact with this company on a monthly basis, let's say. For instance, I'm at Bed Bath & Beyond all the time. And this is what a lot of people do to find their securities. They say, okay, where do I go? Well, I go to Bed Bath & Beyond. And I go there so often that I've been there right before they open, and I've been there right before they close, and the store is always packed with people. So it's reasonable to believe that they're making money hand over fist. I also constantly get emails from them, and I get coupons in the mail. So whatever they're doing must be working. However, once you look at the chart, you can see that they've fallen from, let's just call it, let's use round numbers. It's above 75, but below 80. Let's just say $75 in 2015, all the way down to $19 today. What this means is that most people are going to look at this and they're going to say, wow, this is a good company and it's really cheap. I should buy right now. And that is the first mistake that people make. Because on that same philosophy, as soon as this guy went from Endeavor into Discovery, it was always getting cheaper, right? Because this was its low. And then this was its low. And then in 2016, this was its low. And so on and so forth. The idea of categorizing things as either Endeavor or Discovery is to show you plainly that when stocks are in discovery, they're much more likely to trend down or consolidate at its low, which we see trend down, consolidation, small pop, more consolidation, more trending down, small consolidation that turns into large consolidation and then pushes down and consolidates more. That's not to say that this stock is gone forever. There most likely will come a day where I can trade or we can trade Bed Bath & Beyond. But that's when it's made its move out of Discovery and into Endeavor. To show you what I'm talking about, let's look at a stock that did just that. Where are we? Let's go Fossil. Let's back up on Fossil here. And we can see that this was starting in 2015 here. I'll mark the date that it went into Discovery from Endeavor. At its high, January of 2015, it popped into into Discovery, and it stayed there all the way until February of 2018. During this entire time, price did nothing but fall. It made you think sometimes that it was going to spike and start a long-term upward trend, but then it immediately failed for whatever reason. This is the technical view on if stocks are more likely to rise or fall. Now let's zoom in here to Endeavor, and we can see that as soon as price entered the Endeavor category, this is when we've gotten our largest uptrend. So that tells you if you were likely to trade Bed Bath & Beyond that's still in Discovery, which has every opportunity to continue falling, or if you were going to trade Fossil, which one would you choose? You would hands down choose the one that's already in Endeavor. Or you would have started looking at this as soon as it entered into Endeavor. Now this stock has a long ways to go to make it back up to its high. Again, I'll use round numbers. Let's call it 130, even though it did move a little higher. This is the kind of stock that you want to look to for your long-term movements. Not something that's yes, is cheaper and at a lower price, but has no opportunity to move up. Now, let's continue on with our other examples. Here's a technology company. Oh, you know what? We just did a stock that's in Endeavor. Let's look at another in Discovery. GE. I put GE on this list for one simple reason. It has been in Discovery since February of 2017. I say this because it is hard on any given day to turn on either CNBC or Bloomberg and not hear someone tell the general public to be going long this stock. And in my opinion, that is just a massive mistake. Since February of 17, the stock has been in discovery and has been doing nothing but move down. It very rarely even consolidates. It's just lower almost every single day. And as we can see by today's movement, it's not done moving down. So yes, this is cheap. But again, on that philosophy, it was cheap here in May, and it was cheap here in October and in November. And then it was even cheaper here in the beginning of 2018, and it's even cheaper today. There will be a time and a place to trade GE, but that is not today. Like I said, these stocks are cyclical, right? So hopefully, I highly doubt this company is going to go out of business. What you're going to see is you're going to see this come out of discovery and move into Endeavor. Chances are it will be at a higher price than what it's currently trading at today, $13.64. But you never look for stocks at their all-time low, and I never look for long-term trades for stocks that are at their all-time high, because trust me, all the money is made in between those 2 points because it's safe money. Now, let's look at the opposite. Let's look at a stock that is in Endeavor and was at a cheap price. This is Aspen Technology. I put this one on the list because I've actually never run into someone that has heard of this company. If you have and you've been in it, I mean, I say hats off. Let's check when this one entered into Endeavor. Price was roughly $37. Today it's $99. This is one of those stocks that has a beautiful uptrend. This is the kind of uptrend that you wish for, that you hope for, that you're always looking for. And we can see that it did spend some time in discovery. It looks like it traded sideways in Endeavor. It had its largest push down while in discovery. It consolidated at its low like it should have. It got back into Endeavor, made a push up, fell into discovery, fell back down, made a short stint back in Endeavor, pushed down very hard in discovery, and when it popped back into Endeavor, went on its largest run. This is the reason why we're only focused on stocks that are in Endeavor. They have the highest probability of making long-term upward trends. Okay, so by now, I think you get the general point. When price is in Endeavor, it's likely to trend up, and when it's in discovery, it's likely to trend down or consolidate at its low. So I'll get rid of these charts. Don't want to save my changes. Let's jump back into Metastack. Now that we know that we're only going to focus on the stocks that are likely to trend up, the question then becomes, what kind of upward movement will occur? Which brings us to color codes step 2. Identifying the correct upward movement. And this is how it works. Inside Endeavor, colored signals represent the movement that's most likely to occur. Now you can predict future movements without having to interpret any indicators. We've identified basic movements that price will make while in the Endeavor category, and we label them with colored signals, making it remarkably easy for you to recognize them. Each signal will appear as an arrow located below price action. Green signals represent long-term trends. The blue signals represent short-term trends. And black signals represent price making a rebound back to highs. With these colored signals, you'll be able to predict how price is likely to move within seconds of looking at the chart, saving you valuable time since, once again, there's no indicators to interpret. Today, though, we're only going to focus on long-term and short-term signals. However, signals are only useful if you know the right price to enter the trade at. Otherwise, even with a good signal, you're still just guessing at the right entry price. And this is where Endeavor really gets good. You no longer have to guess when the right time to enter the trade is. All of our signals come with individual trigger points shown in the commentary section. Now, you're probably thinking, well, what's a trigger point? Trigger points provide the exact price that needs to be crossed to confirm the signal, which means gone are the days of jumping into a trade just because price took off the last bar's high. That one-size-fits-all approach is now a thing of the past. All of our trigger points are customized to fit the specific security that you're looking at. Our algorithms take in historical pricing information based on past movements and create custom figures for you that we call trigger points. Here, I'll show you an example using the blue signal. As you can see here, the trigger point is 1056. So if price crosses the trigger point, we can expect a short-term trend because remember, that's what the blue signal represents. The next day, price crosses 1056, so the signal is confirmed. And just as predicted, a few days later, price begins to move up. By using these colored signals in combination with our trigger points, we instantly know two things. Number one, when it's safe to enter the trade, and number two, the type of movement that price is going to make. In this case, a short-term upward trend. Now, trigger points also work the opposite way. For my second example, I want you to pay close attention to the high of the signal bar. You can see our trigger point is 2209 and it's slightly higher than the current bar's high. Watch when I move forward in time. We can see that although price did take out the high of the signal bar, it did not take out the trigger point. So the signal is not confirmed and we see that price fell. I've seen price come 1 penny away from crossing the trigger point and then turn around and tank. That's how accurate these can be. So when a signal appears, you can now identify the type of upward movement price will make. But before we jump into Metastock for more live examples, we should also talk about where and when is the correct time to exit. Because as we talked about in the beginning, you don't actually make any money until you get out of the trade. Which brings us to Smart Get Outs, step 3. Identifying the right time to exit. And this is how it works. Smart Get Outs provide a realistic view on where price is likely to move before an exit is necessary. Their goal is to prevent traders from overreacting to natural swings in price. Now, our Smart Get Outs come in a variety of different forms, but today we're going to focus on the early warning signal, which identifies when a downward movement in price may occur during an upward trend. Or, simply put, they identify price dips. Early warning signals are represented by a red diamond above the price on all the charts. So, if price is categorized as Endeavor and is trending up, this will tell us when price is about to dip down. Now, sometimes early warnings can help us predict how far down price is going to fall. For instance, when you get multiple red bars leading up to it and the trigger point is crossed, you can actually expect a 2 to 5% dip in price. Now, you can either write that down or just keep it in the back of your mind for now, and we'll come back to that little tidbit later. For right now, we're going to jump back into Metastock for more live examples. Okay, I think it's fair, or it's only fair, to bring back up the two stocks that were in Endeavor in our last example. It was AZPN and Fossil. Because the first question you're going to have is, okay, I've brought up Fossil. I think that this is a stock that I would like to trade. Okay, no problem. I look down at the bottom. I instantly say, is price in Endeavor or Discovery? Well, now it's in Endeavor. Okay, so what do I do next? Next, you want to come up to your expert advisor. You want to select Endeavor because that's the category the price is in. Hit attach and close. We have a movement warning, which tells us to proceed with caution. Price has moved up too fast and could be overextended while the bars are red. Red bars. Sound a little familiar? I'm going to say okay. I'm going to zoom in a little bit more on this. Now, for the sake of this example, I want to ignore the fact that these bars are turning red for a second. I want to start all the way back here when we got our long-term trend signal. Remember, that's what green signals represent, potential long-term trends. You know that because you can scroll over it and you can see green long-term trend. But like we talked about before, that's only half the battle. You don't get a signal and immediately jump in the trade. Let's blow this up. what we want to do is we want to check our commentary and find our trigger point. To do that, since we want to focus on green, I'm going to come back up to our expert advisor. We selected Endeavor, but this time we're going to do Endeavor Green because that's the information that we're looking for. I'm going to hit Attach and Close. Then I'm going to come up here, View Expert Commentary. Now this is where Metastock blows away all competition. Their commentaries are second to none. This box can give you a world of information. I'll start at the top and we'll work our way down here. So first off, you can instantly identify what stock you're looking at, which is something that you should probably already know, but every now and again people get confused with ticker symbols. Also, it'll tell you what date on the chart you're looking at, 6/14. We know that because this little marker here always tells you where it's pulling data from. We know that right now we're in the green commentary. What does green stand for? Long-term trends. Then we get a more precise definition of green. Green signals represent price building strength after transitioning from major lows. So let's get a visual on that. Let's back this out. And since, like we said before, the high on this stock, we called it 130 from years ago. I think that was 2013-ish. And at the time of this green arrow, it's trading at about 15. So this is absolutely coming off a major low. Next, price is likely to develop an upward trend that can last from months to years. Well, again, that makes perfect sense. If we were at a low, price used to be at a high, it has all that room to move up. However, what we need here are 3 consecutive closes above the trigger point to confirm the signal. So what does that mean? That means when we zoom back in here, we know that we had a green arrow on 216. But like I said, you don't just jump in right away. What we need is, I'm going to scroll down here, we need to check our trigger point. Our trigger point is 1542. I'm going to mark that on a chart. 15.42. Okay. Now, the third consecutive close is marked with a green 3. So you can either place the line on the chart or you can just wait until the green 3 icon occurs. When you scroll over it, we see green confirmed. That's how we know it's now safe to enter this trade. Why do we do this? We do this for 2 reasons. Number one, when it comes to long-term trades, if you're running a scan for this, it's good to say, okay, here's Fossil, here's the stock that I'm looking to trade, but I need proof, I need confirmation that price is strong enough to actually move up for a long-term trend. So we identified that here with our first signal, but then price fell. This does not mean that I want to buy this at a lower price because this could have absolutely fallen into discovery. What I want this to do is I want this to prove to us that this has enough strength to start its upward trend. To do that, we need 3 consecutive closes above the trigger point, which is why we mark that with a green 3. Meaning as soon as this close comes, so at $18.87, you are good to go on this. You can place your long-term trade. I'm going to get rid of the commentary here. Now the question becomes, okay, so we're getting in at this around that 1882 price. We know that price could make it up past the $100 mark. What's my exit strategy, right? We're going to start thinking about right now is our smart get outs. What's that philosophy supposed to tell us? Well, me personally, what I do is I need at least 20% potential profit in any long-term trade I take. That's the minimum. I'd say 15 to 20%. And again, these are the starting points. This is saying, hey, if you don't at least have opportunity to make this, you want to move on to the next one. Well, that seems very doable considering that the all-time high on this stock is above $100. We'll zoom back into this. This means that from our entry price on 5/10 at $18.87 to today it's trading at $28.85. Let's see, that would be on a percentage basis. Well, above $23, that's got to be 20%. Well, I'm sorry, that's got to be in the 50s. That's got to be 53% at $28, which gives us our 20% would most likely be somewhere around $23. So as soon as we hit that, that's when I start thinking, okay, maybe I've gotten, a good chunk of money. I made 20%. In this case, you would have been in this trade. We got in at 510. This is now 6-1. Not that long, not even a month. I would most likely have taken half my profit. Now, you combine that with the fact that these bars are turning red. Remember, we got that alert in the beginning. That means the price is starting to get overextended. So we sold out of half the position. We did buy this for the long term, but this is where remember in the beginning we talked about, we were going to talk about three things today. Number one was long-term or short-term. Number two was staying flexible when trading. Although I wanted this for a real long-term trade, the fact that price is overextended near its all-time low makes me nervous about the fact that it can actually move up for a good 6 or 7 months. What I would do is I'm going to wait for our early warning signal to appear, and if it does, that's when I'm going to sell out. So every day that these bars turn red, I'm going to pay more attention to this stock because I no longer have faith that it's going to start to move up. Again, for 6 or 7 months, hitting that $100 range. But at the very least, you know that you made your 20%. Let's check out our other stock. The other one was AZPN. Again, I'm going to start over so I can see here, where's price? Price is in Endeavor, okay. Come out to expert commentary, apply Endeavor, attach, close. See what happens when you apply Endeavor. Oh, we have a movement warning on this guy too. Means that price has moved up too fast and could be overextended while the bars are red. Well, this one makes a little bit more sense since price is trading at what looks to be an all-time high. But we're not interested in jumping into this stock right here. We're interested in what happened when it came out of Discovery and into Endeavor. Now, like I was explaining before I read the alert, what you get when you apply Endeavor is every signal that we offer. But right now we're not concerned with that. We really just want our green information. So again, I'm going to come back up to our expert advisor, select green, hit attach, then close. And now you can see most of those signals went away. We're left with our early warnings and we're left with our green, which that's what we're focused on. We want to know when price came out of Discovery, what was this system telling us to do? Well, the first time it came out of Discovery was on 5/2 of 16, but what do we need? We need our 3 consecutive closes above our trigger point, which right away, I don't have to check for that because I can see there is no green 3 here. Price falls back into Discovery. That's perfectly fine. We didn't own it. Price pops back into Endeavor. We get a long-term trend signal, followed by our green confirmed. That's exactly what we're looking for. Now, I will go into the commentary just so we can get a visual on that. Let's see what our trigger point was. It was 38.42. 38.42. Now, some people like placing the lines on greens and some people like just waiting for the icon to appear. But as soon as you see that green confirmed icon, you are good to go. Which means we waited, this was 5:25, we get 1, 2, 3, 4, 5, 6, 7 days from that green. What could you have done in those 7 days while waiting for that signal? Well, first and foremost, what you want to do is you want to do a little bit of fundamental research. Even if you don't truly value that, you should still make sure that everything's on the up and up with a company that you're going to put your money in for the long term. Now, again, what would we be looking for profit-wise on this? I look for a minimum of 20%. So before I can then jump in this trade, I'm saying, okay, is there 20% between my entry price, which is going to be the close of that confirmation day, and its high? This one you easily have it, which means I can enter the trade. I would have, again, with my personality, sold at least half my shares at 20%. and I would have let the other half ride, which I'm not saying that I would have held this if I bought in at that cheap price. Let's see, what was that? Our green confirmed came on 6/6 of 16. The close was $39.54. If I bought it that, I am not holding onto this stock until $90. I do trade things for the long term, but I think it's more than likely if I bought that at that price, I would sell out at $60. Where people can fall into massive traps sometimes is they play that woulda, coulda, shoulda. This is one trade on one stock. We showed right here how we could have placed 2 trades on 2 stocks and still made a minimum of 20% on both. But let's say you don't want to guess at random securities, right? You don't want to bring up random stocks and say, oh, I wonder where the signal is on this one. Let's go File, Close All. Show you one of my favorite things in Metastock. Right now we're on charts. I'm going to go to Explore, and what we have here is these are the explorers. You can run reports if you want to find all the stocks that are in Endeavor. If you want to find all the stocks that have green symbols, you can do all the stocks that have blue symbols. All you have to do is select it. Then you can choose a list. For instance, I use custom lists. I have 50 stocks that I know are good trenders. I have the Dow 30, and then I have a list of just over 1,200 stocks that, again, that I'm very, very familiar with. But if you don't have custom lists, you can choose from the NYSE, the NASDAQ, almost any exchange on the planet. Now, I already ran our green report, and I did it on my custom 1,200 stocks. I backdated it to 5/7 for a very simple reason. One, these are long-term trades, right? So you have to give it at least over a month to find out if it actually worked out. And number 2 is I've actually traded one of these stocks. I'm in the trade currently. So I thought would be a good idea is I'll bring up, let's just do 3 of these stocks, and I'll walk you through my process. Because when you run a report, let's say again, we ran it on that 1,200 stocks, we got 1, 2, 3, 4, 5, 6, 7, 8, 9 of them that came up in one day. My goal is not to trade all 9 of these. My goal is to pick the best 1, maybe 2 of these, and then watch for those green 3s. I'm going to base most of what I do off price. That's why I'm going to choose the first 3 here. I'm not really interested in taking a green on a stock that's a $95 stock. But we have $9 here. In this scenario, we're capping at 16. Everyone can afford those. Let's open up these charts. Okay, this is what a chart looks like when you normally open it up. You can tell on the bottom, it does not say Endeavor, it does not say Discovery. That's because we have to put the template on. So it's as simple as a click of a button. I've saved the template down on the bottom, STS, Endeavor and Discovery template. So now all I have to do is apply that to every chart, and then we will be good to go. Now, usually you don't have to do this next step. What I'm going to do right now is I'm going to backdate to the date that we ran the report. So that was 5/7. Because we want to know if we ran the report on that date, what did these stocks look like? Again, 5/7. One more time, 5/7. Say okay. All right. Now I want to come up here. We ran the green report, so I want to apply our green expert advisor. Say okay. I get an alert that tells me the price has moved out of Discovery. It's moved into Endeavor. Perfect, that's what I'm looking for. I also get an alert that's telling me that a green occurred. We can see it right here. In this scenario, today is 5/7, so green occurred. Price is likely to develop a long-term upward trend. Once confirmed, the 3 consecutive closes above the trigger point are needed to confirm the signal. Perfect. Gives me a little reminder so I don't always have to go back into the commentary every time I run a specific color. Now that's going to happen on each and every one of these. I'm going to hit attach, close, and I'm going to skip the alerts for this because we already read them. I'm gonna do the same thing for UA. I'm gonna apply my green, but I'm gonna skip all the alerts because it's just gonna tell me the same thing. Okay, now let's go through these guys one at a time. CUZ. First thing that I'm gonna do is I'm gonna back up so I can get a better picture. We can see that this stock was in Endeavor for a very long time. Most of 16, all of 17, it popped into Discovery in 2018. Now, right off the bat, what do we have here? We have a green arrow. Today's close is $9.26, but where's the high? The high is right here from December. There is no way you're going to get 20% out of this stock. So immediately I cross it off. Goodbye. I just took my 3 stocks. Now I'm down to 2 stocks. Let's go RWT next. Check, verify, long-term symbol. Perfect. We can tell down here we are in Endeavor. We'll back out. We'll take a look at this guy over the long haul. When in Endeavor, it does have a history of trending. Perfect. That's what we want. It fell into Discovery. This time we just get a long period of consolidation. Today's close is 1578. But once again, the high on this is around $17.41. So I don't have anywhere near 20%. Again, that's a no. Passing on this. I'm left with UA. Let's back out of this. So we can see that UA has been in Discovery since 2017. Whenever you see this white here on the ribbon, that just means what happens is we need at least 120 trading days for the system to start working. So this just represents that you're inside of that marker. Only after 120 days are you going to start to get the ribbon on the bottom. So this, for argument's sake, is the first time that this stock has ever been in Endeavor. So pros and cons. Pro, I know it's at a low. It just came out of Discovery. It's only ever been in Discovery. Con, I don't really know if it has a history of trending up. But again, I'm gonna take that accordingly. So let's walk through the process now. This is the first stock that we found where we have the opportunity to make a minimum of 20%. So let's walk through our steps. I have the signal. I come up, view, expert commentary. I'm gonna scroll down. My trigger point is 1626. Let's apply that, 16.26. I'm gonna make it green since that's the color we're working with. Okay, perfect. But now I know where to start the count for our 3 consecutive closes. That's good. But we also want to be thinking risk to reward, right? Smart get outs. So if we scroll down in our commentary, since we finally have a stock that we want to trade, we give you long-term stop losses. So our system says that for the long-term trades, use 1472 through 1397. I'm also going to apply those lines on the chart. 1472, 14.72. Say okay. That's our top range. Our bottom is going to be 13.97. Now I can calculate my potential risk to my potential reward. I know I'm looking for a minimum of 20%, and I know the price can fall down here before I have to think of exiting. Now, what we always recommend is that you don't sell out just because price dips in here. We're looking for closes in this range. Closes in this range would tell us, okay, that upward trend is most likely not going to occur. It's better to pull the ripcord, get out of this, wait for a different day. We'll say, oh, actually, you know what? Now, since we're in the commentary on a stock that we want to be trading, I'll show you the rest. What we have here is we give you the 15-day average true range and the 120-day average true range. So you can tell on average if price is having a good trading day or a bad trading day. We also give you the 1-day volume along with the 120 days, which is roughly 6 months of trading. And then for this part, it doesn't matter if you are new to the system or if you've been using the system for a long time. If you ever have any questions and you don't want to send us an email, maybe you're in a rush, you can just click this link and you're going to come right to our tutorials page. where here you can watch full-length videos on the entire Endeavor system, or you can spot check. If you want to know a little bit more about the difference between Endeavor and Discovery, you can run the Beginner's Guide to Potential Upward Trends. Or let's say you went on vacation. You normally trade greens, but you've been on vacation for a week and a half, and you want a quick little reminder on how greens work. Well, we explain it all in 5 minutes or less, or you can re-watch the Guide to Long-Term Upward Trends. And we do this with every single color that we offer. And of course, I believe it goes without saying that if you ever have any questions, all you have to do is come back up here, hit the contact button, and you can shoot us an email. If you have questions on other portions of the things that we represent, you can just scroll down here and you can read very simply what all the symbols that might pop up on your screen mean. This is why I said before that Metastock's commentary is second to none. But right now, we have everything that we need to place this trade. We know that our upside potential is going to be 20%. We have our original trigger point. We know where our stop loss is. All we need now is to wait and see if we get our green confirmed alert or icon. So I'm going to jump forward in time here. I'm going to skip. Well, that's our alert telling us we're in Endeavor. This is our alert from 5.7 telling us that a green occurred. This is what we're looking for. Here's our alert that tells us green confirmed. Today is the third consecutive close above green's trigger point. Perfect. Hit OK. I'm good to go. I can enter this trade at $16.64. Now let's jump forward in time even further to today, 6/14. Remember before when we were talking about smart get outs and I gave you the definition of early warning? Well, that's exactly what we have right here. And we can see that this happened on 6/7. Early warning occurred. Price is likely to experience a dip during an upward trend once its TP has been crossed. TP stands for trigger point. Okay, good information. This is reconfirming that on 5/10 we did have a green confirmed. I'm going to skip all the remaining alerts. So what does this tell us? Once again, I bought this stock for a long-term trend. This is what I was talking about before. I'm actually in this stock. Well, Capaccio Trading is in this stock. And right now, I'm keeping a very, very close eye on this. So if I entered at 1664 and now price is currently trading at 21.73, but I have my early warning signal. So I want to come up here, early warning, attach, close. I'm going to go view expert commentary and I'm going to get all the early warning information. We already went over the definition of it before, but in layman's terms, it means price dip, potential price dip. Our trigger point is 21.31. Let's mark that on the chart. 21.31. We'll make this red. And that's what we're looking for. I'm going to stay in this trade until price either continues to move up, or if it crosses our trigger point for early warning, I'm going to sell out. Why? Because what do we have? We have multiple red bars leading up to an early warning signal. Meaning, if price crosses this trigger point, which it came very close doing today, I can expect a 2 to 5% dip in price. Now, since price is at 21.73, I'm already above my 20% profit goal. But I didn't sell out this time at 20% exactly because I got that early warning. And I knew, okay, on red bars, that means price is starting to get overextended. I may be able to get just a little bit more out of this. But as soon as that trigger point is taken out, I'm gone with at least half my shares. I'll let the other half ride. Personally, I'm going to do one of two things. Price is either going to move down a minimum of 2 to 5%, or it could continue down. And if I ever get back into my original stop loss, I'm going to sell the rest of my shares, knowing that I made 20% on half of them. If that doesn't happen, let's say it crosses the trigger point, it moves down 5%, and then it rebounds up, well, I'm still long half my shares. And I would consider selling the rest of them either after it fills this gap, or after it goes halfway onto the next. But it's always good to constantly re-look at the trades that you're in and say, okay, given current market conditions, what can I do? Originally, I bought this stock thinking, great, I can buy this at the cheap and its high is above $45. But once again, I got these red bars really close to my entry. When you see these stocks that immediately move up, when we were looking at that Aspen Tech, it did not have red bars this close to its green. And that's the one that moved from $34 all the way up to $99. So when you're getting those long uptrends that take years to do, I'm perfectly fine with being in those trades, but this is not a good sign. You should be getting these red bars near all-time highs, not right off its all-time low, which is why I'm readjusting my strategy. Okay, let's get out of UA and let's move on to the second portion of the presentation. Like I said before, it's not all about long-term trades. While those trades are working in the background, we want, I'll uncheck this, we want to take a look at our blue short-term trend trades. This, once again, I've already ran the exploration on my 1200 stocks. I backdated this to 6.4. Why 6.4? Well, these are short-term trends. Today's the 14th. If I go back 10 days, 10 actual days, not 10 market days, some of these should have either made their money or lost their money by now. So again, this is the type of thing, I ran this with no additional filters. So this brought up stocks between the prices of $41 and $168. So when we're talking about short-term trends, there's no reason to be buying stocks that are over $100. So I'm going to focus on, let's do 1, 2, 3, let's do 4. Hit open chart. Close out of this. Once again, you'll notice there is no Endeavor Discovery template on here, so I'll put those on. CEA, JWN, PLNT, and UYG. Okay, only takes a second. I'll organize all of them. All right, now quick glance at these four. If we're saying, okay, these four came up today, I want to trade a short-term trend stock. Okay, which one stands out the most? Right off the bat, this CEA stands out to me. Why? Because it's incredibly gappy. This is one of those stocks that I want to get rid of right off the bat. When you have a stock that gaps almost every single day, that's usually a sign that this is a foreign company trading on an American exchange, China East Air. There you go. This is going to be just remarkably difficult to identify short-term trend on. So I'm going to get rid of this. Changes? No. That brings my 4 down to 3. Okay. Now let's do what we did before. Let's backdate these 6.4, 6.4, and 6.4. Now we come to our expert advisor. We ran a blue report, so we're going to apply blue to it, attach. And just like before on our green, we're going to get our alert. Blue occurred. Price is likely to develop a short-term upward trend once its TP, again that stands for trigger point, has been crossed. Perfect. Okay. I'm going to apply blue to all these, and I'm going to skip the alert because it's going to say the same thing. Skip. Apply it to UYG, blue, attach, close, skip. Okay, now we're set. Let's start with JWN, Nordstrom's. Now, the first thing you want to do whenever you look at these blues is you want to back it up a little bit, and just like we did with green, we want to start to establish what's the history of this stock. Just because a signal came up on it doesn't mean we have to take that trade. Doesn't mean that this is a good trending stock. And that's something that you want to do visually right off the bat. Like I said before, Metastock provides you with visual representation of data, and that's perfect. If you have a hard time seeing trend, here's what I recommend you do. You come up here to moving average. I'm going to pick the color of it. I'll make this one gray. We're going to put a 100 period simple moving average on here. I'm going to hit OK. I showed 2 examples of stocks that had perfect uptrends. They started at a low and they just kept climbing. This does not look like that. We can see here that whenever it's an endeavor, you do get these spikes, but they're very violent. It falls violently. What you don't want to see is price constantly slicing through our 100 simple. This is a really easy way to see if a stock is a good trender. Zoom in here. And now the second thing I want to look for is, does this have a history of trending? Well, this is a little push up. It was in discovery for a very long time, so of course we get no signals. It was an endeavor here with a small push up. I'm going to say no to JWN. Now our 4 is down to 2. Let's start with PLNT. This, right off the bat, we can tell visually looks much different than JWN. But in case you have a hard time seeing trend, let's put our 100 simple period moving average on there. I'll make it gray. This is what we're looking for. When you back this up, look how smooth this line is. Look how price on the average stays above it and almost never even touches it. That's a great trend. That's step 1. Step 2 now is I want to zoom in here and I want to see the last couple times that this stock had blue arrows, what happened? Well, we got a blue arrow here, little stutter, and then a decent trend. Blue arrow, decent trend. Okay. Blue arrow, decent trend. Now we get into 2018, blue arrow, there's a small trend. Blue arrow, a small trend and then pull back. And that leads us up to ours today here. Although these are fairly small trends here, I'm going to say okay to this one. This guy, out of the 3 that we've looked at, has looked the best so far. So what am I going to do? View, expert commentary. We need that trigger point. I'll scroll down here. We also have the definition of blue. What do blue signals represent? Short-term trends. Blue signals represent price smoothing out and creating momentum. That's perfect because that's what we're looking for. We're looking for that short-term momentum. Price is likely to stop its irregular movement and develop a short-term upward trend once its trigger point has been crossed. Again, perfect. Now I know what price it has to cross before I can jump in it. 41.39. Let's apply that. I'll make it blue since that's the color we're dealing with. 41.39. Okay. There we go. Now I know how high price has to rise before I can actually take the trade. So this is a short-term trend, very different obviously than a long-term trend. And I don't have to make that distinction. These arrows tell me that. When I scroll over it, it no longer says long-term trend, that was a green. These blues say short-term trend. I know I have to take off my trigger point of 41.39 before I can enter it, but how high can this rise? Where am I looking for this to go? This is where we need our realistic expectations. For blues, I'm always looking between 3 and 5%. My max goal on these is always that 5%. Once I hit 3, I'll consider getting out. I want to relook at the trend. I want to find out where the markets are. How strong has this stock been moving? Did it take 3 days to move 3%? Did it take 4 days? Did it take a week, 2 weeks? These are the types of things that I want to consider. But for right now, I'm going to set our profit line here at 5%. So if our trigger point is 41.39, that means 5% is 43.46, I believe. 43.46. We'll make this a green line representing our profit. Say okay. Okay. Let's zoom out in the chart. That's the distance we have to move. There's our trigger point. There's our 5%. So let's jump forward in time to today. Let's see if this made money or lost money. Since I move forward in time, you're going to re-get all your alerts. I'm going to skip them again. We already know what date the blue arrow came up on. So this turned out to be a very good trade. You take out the trigger point the next day, meaning as soon as any bar gets above this price, you can buy in. You do not have to wait for 3 consecutive closes on blues. As soon as you cross that trigger point, that's when you enter. You can even set your computer to do it automatically. In this case, we're only in it for 2 days and we hit our 5%. Now here's where most people run into trouble when trading. This guy moved more than 5%. It stuttered a little bit here, but today it looks like it's starting to move up and it can make another leg easily. I still am perfectly happy with my 5%. That is all I'm looking for. Whoops, wrong button. So let's jump over to UYG. Again, the first thing I'm going to do, I'm going to back up. I'm going to apply our moving average so we can identify trend. I'll make it gray, 100 simple. Okay. Well, this guy started out good. We can see over the long haul history, this is a decent trend. You run into the moving average a little bit here, but I mean, there's absolutely nothing wrong with this. You are in Endeavor for the vast majority of the history between 2018 and the beginning of 2016. But we're dealing with our most recent blues. So when I look at this blue, it had a little uptrend here, fell down, but then trended over the long haul. This one immediately started moving up. This looks like in 2017, late 2016 through all of 2017, this was a good trender. But we're in 2018, and we can see that this stock ran into a lot of trouble here. We are now slicing through this moving average. That is not what you want to see. We zoom in here. This isn't a huge deal, but price is currently underneath our 100 simple. Again, that's just not ideal. If you have two stocks to choose from, if you can choose PLNT or UYG, I'm going with PLNT. So I'm going to say no to this. There's just no reason to take that risk, especially considering on this, you can't be looking for 5%. That would just be unrealistic. Price here is choppy, it's sloppy, it's violent. You're looking for maybe a max of 3% on this guy. Where this one, we're looking for a max of 5%. So we'll get rid of him. And it looks like we chose the right stock because this one made 5%. I'll get rid of this. Okay, let's jump back into Metastock. And that's it. Those are the 3 steps. Step 1, identify the big picture movement. Step 2, identify the correct upward movement. And step 3, identify the right time to exit. When you put all 3 steps together, you have the Endeavor add-on for Metastock. So now the moment that most of you have been waiting for. That's great, now you know how it works, but how much does it cost? Surprisingly, not that much. The Endeavor add-on is offered as a subscription service through Metastock. So you can sign up for the monthly plan and pay $99 a month, or you can sign up for the yearly plan and pay $9.50 once a year, which means you get a savings of around 20% for the yearly plan, which comes out to be around $238 of savings a year. In fact, when you break down the yearly pricing, it's about $2.60 a day, which is less than the price of a daily cup of coffee. Plus, right now, if you try Endeavor yourself for 1 month, we're going to give you the second month for free. And if you go to sts.whatsendeavor.com/e, you can sign up and get our free quick picks, where we send trade ideas right to your inbox. Very quickly, I'll give you an idea of what that looks like. When you come to sts.whatsendeavor.com, you can watch a short video that shows you how all the signals work, and then you can give your email address here, sign up for quick picks. What you're going to get is emails that look like this. They primarily focus on early warning signals that are going to predict falls in price of between 2 and 5%, and our blues. So this one was sent out on June 6th, 8 days ago. We had 2 stocks we were focused on, ACOR and TAP. ACOR hit our profit goal in 6 days, moving up a little over 5%. And NTAP in 3 days moved up 417. This is a really good introduction into how these 2 signals work. We also give short videos below most of the emails that kind of, again, they reintroduce you into what mindset you should be in, what you can consider is a good trade or a bad trade when using these blues. It's a real good stepping stone. Let's come back in here. And last but not least, if anyone ever has any questions, we always say, don't be shy. All you have to do is shoot us an email at about@simplicitytradingsystems.com, and we'll get back to you within 1 trading day. Okay, now I'll turn it back over to Jeff, and we'll see if anyone has any questions.
Okay, I'm back. Can you hear me?
I can.
All right. Looks like somebody just wanted you to repeat the website link. We don't have a lot of questions coming in here.
Oh, yeah, I can go back to that. No problem. sts.whatsendeavor.com/e.
Okay.
And then
There
also,
you
if
go.
anyone wants to just send us a general email, we can always send this information out.
Yeah, cool. Well, great presentation today. I'm going to go ahead and type this in the chat. I don't see a lot of questions coming in. So thanks for joining us today, Ryan.
No problem. If by chance, if anyone does have any questions, if they're watching this, then over the next couple of days, I know this is most likely going to be sent out, what, Jeff, later today?
Oh, the recordings will be
The
sent out
recording?
within an hour.
Okay, perfect. If anyone has any questions after they watch that, you can shoot them over to me. And then if it's a question about how Endeavor works inside Metastack, I can make you a quick video and shoot it right back over.
All right, guys. Thanks for coming today. Thank you, Ryan. And we'll see you at the next one.
Thanks, everyone, for showing up. I hope they enjoyed.